man, the US has the world reserve currency. They're so dumb. Why do they have so much debt? No, you're misunderstanding. They have so much debt only because they have the world reserve currency. Their job is to constantly be exporting the dollar. Now, what does that do to your local economy and to your country? It hollows out the domestic economy over time. The world kept needing dollars, so the US kept printing dollars, okay? That means we stopped producing actual stuff, okay? So our industrial power went to shit. Factory jobs, our middle class, everything. Like when I'm using the term hollowed out, like the inner structure of America decimated. We talk about things like the wealth gap.
In a groundbreaking analysis, finance visionary and CEO of Strike, Jack Mallers, challenges conventional economic narratives by revealing the profound implications of the US dollar's status as the world's reserve currency. He begins by confronting the misconception that America's substantial debt signifies fiscal mismanagement. Mallers argues that this debt is a direct consequence of the US issuing the global reserve currency, necessitating the continuous export of dollars to meet worldwide demand. This unique position compels the US to print more dollars, effectively transforming it into a dollar-exporting nation. However, Mallers warns that this dominance comes at a significant cost. The US has shifted from a manufacturing powerhouse to a nation reliant on imports, leading to the erosion of factory jobs, the collapse of the middle class, and the decline of domestic industries. This transformation has left the economy vulnerable to external shocks and internal instability. In response to these challenges, Mallers advocates for Bitcoin as a solution. He highlights Bitcoin's fixed supply and decentralized nature as key attributes that make it a superior store of value compared to fiat currencies. Despite Bitcoin's notorious volatility, Mallers remains optimistic about its long-term prospects, viewing short-term price fluctuations as temporary hurdles. He emphasizes that Bitcoin's resilience and potential for appreciation make it an attractive alternative to the depreciating US dollar. Mallers predicts that as the dollar weakens due to ongoing quantitative easing, Bitcoin will serve as a hedge against inflation and currency devaluation, ultimately outperforming traditional assets. As we bring you clips from his recent discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Bitcoin is dipping, or was at least. There's a lot of volatility in markets, and everyone is tying it to a trade war, to Trump's tariffs. Here's my message to the public. This is bigger than tariffs. This is the post-World War II economic order unwinding. People think that this is about Trump's tariffs or about trade wars with other nations. It is not. The entire global economic system that has existed since World War II is breaking down, okay? The United States has spent the last 80 years or so running what's called a trade deficit, sending dollars abroad to other countries, exporting dollars, and importing goods and debt, okay? This system is no longer sustainable. It was never built to last. And it is coming to an end. This is not another trade war. This is a full-blown economic reset. This is the United States saying we cannot run this scam any longer. Okay, what am I talking about? After World War II, the United States created a system that worked for a little bit. What was the problem? Okay. The U.S. was the only industrial power left standing after World War II, okay? It funded the global reconstruction of the rest of the world. So primarily, you had Europe, Japan, other industrial powers were decimated, destroyed, okay? And the world needed to somehow get back on its feet and start producing things again. And the U.S. used things like the Marshall Plan, Bretton Woods, over the last, 50, 60, 70, 80 years to bootstrap the world back on its feet. The other countries around the world needed dollars to rebuild their economy and rebuild their industrial power. The U.S. figured we will provide them the dollars, okay? So here was the plan. Other parts of the world would start producing stuff and exporting them into the United States. The US would import the goods that they're producing and export them the dollars, okay? So other countries around the world would get dollars and US debt by treasuries, okay? The US would shoo away with the dollars and get goods and services, okay? Now this worked for a while, and it was the greatest trade deal in history. Because why? The world got to reindustrialize after a devastating world war, and the US got rich. Everyone was happy until obviously it stopped working. Now, this is known as the Triffin's dilemma, okay? This is the system that was never built to actually last. What is the Triffin's dilemma? It's when if you have a fiat currency, a government currency that's the global reserve currency, it's a bit of a trap, okay? Meaning that you have to, if you have the world reserve currency, you have to run a deficit in order to supply the rest of the world with the reserve currency. Your job is not to produce real things, real goods and services for the world. Your job is, unfortunately, to give the world your currency. So you're never producing more for the world than you're consuming. At the end of the day, you have to hold yourself to printing more pieces of paper than you're consuming goods. So you are going to run a giant deficit. You are going to print a lot of money and run up a lot of debt. The reason the US has so much debt is because they have the world reserve currency. This is so misunderstood. Sometimes people say, man, the US has the world reserve currency. They're so dumb. Why do they have so much debt? No, you're misunderstanding. They have so much debt only because they have the world reserve currency. Their job is to constantly be exporting the dollar. Now, what does that do to your local economy and to your country? It hollows out the domestic economy over time. The world kept needing dollars, so the US kept printing dollars, okay? That means we stopped producing actual stuff, okay? So our industrial power went to shit. Factory jobs, our middle class, everything. Like when I'm using the term hollowed out, like the inner structure of America decimated. We talk about things like the wealth gap. Look around. If you're an American listening to this, go into your pocket, look at your phone, look at who made everything around you. It's probably not in the United States of America. The middle class no longer exists here. The wealth gap is massive. You're either on the far left, the far right, as far as monetary wealth in place within our economy. So this is not a very sustainable, listen, it's obvious. It's not very sustainable to print dollars and create debt in exchange for real things. You have to do real stuff in the real world. You cannot just print pieces of paper forever. Obviously, duh. This was only a solution to bootstrap the rest of the world and get them back on their feet. This was never supposed to be the rest of the world forever, ever. This was a short-term, short stopgap solution. This was never, ever supposed to be how the world was going to work forever. Now, this is known as the Triffin's dilemma. It's having the world reserve currency. It is a system that is built to fail. Now, the world obviously knows this, okay? China, Russia, Saudi Arabia, the BRICS nations, none of these countries want dollars. They're all dumping their treasuries.
According to Jack Mallers, there is a bigger problem behind the current market volatility. For 8 decades, the United States has kept a trade imbalance by importing products and debt while exporting dollars. According to Mallers, this system was put in place by the US to help reconstruct the world economy following World War II, but it has fundamental flaws. In order to supply the world with dollars, the US must run a deficit, which results in a mountain of debt. Jack Mallers observed that the domestic economy has been emptied out and the wealth gap has widened as a result of this system. He also remarked that a move away from the US dollar is evident in the current dumping of US treasuries by nations such as Saudi Arabia, China, and Russia. The shortcomings of the system are becoming more obvious. Let's watch more clips from Jack Mallers' discussion and gain insights.
all these countries are screaming from the top of their lungs. They're not trying to do it secretly. They're not trying to do it maliciously. They're not trying to do it combatively necessarily. They're saying, hey, we don't want to use the dollar for trade anymore. We don't want your treasuries. China's been dumping treasuries for almost a decade. You're saying, why would I own treasuries when the purchasing power of the dollar continues to go down and has to go down? Okay. They're saying, hey, let's explore things like gold. Let's explore something else. Russia and China are now settling increasing amounts of trade in the yuan. Okay. It's not a secret that all of these nations are de-dollarizing. So this is not a theory I made up in my room. This is very public. You just have to tie the pieces together, is that none of these countries want to hold U.S. debt as their reserves anymore. This is very obvious. The U.S. is struggling to find purchasers of their debt, okay? The financial crisis of Silicon Valley Bank was because the U.S. was relying, is the kind way of saying it, but forcing our own banks to be buying our debt. And those long-term duration instruments forced them to go insolvent. So we're forcing our own financial institutions to buy the debt because other nations don't want to do it anymore, okay? And it's like a Ponzi scheme. It's the last sucker finally realizing the game is over, loses. So everyone's kind of waking up to it, and you're seeing central banks around the world increasingly buying gold, increasingly selling treasuries, and increasingly just talking about and socializing the idea of settling global trade in not dollars. And last point before I move on to the next topic, if you understand the Triffin's dilemma and you understand that being the world reserve currency is a trap within itself, you will never want it in the first place. So when people say China wants to be the world reserve currency, the yuan is coming for the dollar. No, it's not. Nobody wants to be the world reserve currency. It's a trap. It's a dead end. Nobody wants the place of the United States. What's going to happen next? We're very likely to find ourselves back at a neutral reserve asset where the world used something like gold, where it's governed by the laws of Mother Nature. No one has an advantage. No one can manipulate it. Everyone has access to it. A nation should not run, operate, and distribute the world reserve currency because they're exporting printed dollars or whatever it is and debt for real goods and services, and it's not sustainable. It's not attainable. Okay, so what's the solution? Let's bring it back to today. What's the solution? The solution is, well, what this administration is trying to do is a few things. One, this whole idea of tariffs. Tariffs aren't about a trade war. Tariffs are about reshoring and building stuff in America. Okay? Also weakening the dollar. Okay? If you want your exports to be competitive, you need the dollar to be weaker, and you obviously need production to be in this country. So when you hear Trump say things like, everyone's taking advantage of us. We need to focus on ourselves. We need to drill, baby, drill. We need to incentivize people to build here in America. What he's really saying, and he said it last night verbatim. I posted this clip on Twitter. He said it verbatim, word for word. In almost every country, we're running a deficit. He said China, Mexico, Canada, Germany, everywhere, we're running a deficit. And he's like, why are we doing this? Why don't I put tariffs on these countries, incentivize production here locally in America? This will weaken the dollar, right? Weaken the dollar meaning inflation. Okay, everyone's like, tariffs cause inflation. Yeah, it's weakening the dollar. It's making exports competitive. Okay, with a weaker dollar, also you inflate the debt away. Okay, so the U.S. has to bring manufacturing back in order to stay competitive. Tariffs force companies to produce in America instead of markets like China. A weaker dollar also makes the U.S. export competitive and inflates their debt away. Okay, the only way to get rid of $35 trillion worth of debt is inflating it. Okay, so the playbook is very simple. The threat of tariffs, okay, and the idea of incentivizing production in America is about bringing it, reshoring the production of real stuff. Okay, America effectively has printed dollars, consumed goods from other places around the world, and gotten fat. Effectively, more or less, summarized version in one sentence. Print paper, consume stuff, get fat. Do nothing, get fat. And so the strategy is we have to make the dollar weaker to make our exports competitive. We have to start producing real stuff. And this is kind of like this game theory that you're seeing play out. Okay, So it's really about restructuring and reordering the U.S., unwinding this World War II setup, okay, and doing it in a way that's sustainable and that isn't going to get, result in war, okay? Now, the main problem that Trump has is the Federal Reserve. Powell doesn't like Trump. Trump doesn't like Powell, okay? It's very obvious. The Fed actually started cutting rates leading up to the election, in my opinion, trying to get the Democrats to win. As soon as Trump won, they paused. No more rate cuts. Okay? Trump needs a weaker dollar. Okay? Listen, guys, if you're going to reshore production of stuff, and Trump's always talking about tax breaks and tax cuts, you know who he's going to give subsidies to? People that want to build here in America. You know who he's going to give tax breaks to? People that want to build here in America. He needs a weaker dollar. You guys think we're going to be able to afford that? We can't afford anything. It's about printing records amount of money. Trump's last term that he served, 2016 to 2020, people bring up all the time. He printed record amounts of money. Yes, that's been his whole strategy the whole time. Devalue the dollar, weaker the dollar, reshore production, and unwind us from this reliance on being the world reserve currency.
Jack Mallers provides additional insight into the changing nature of the world economy, especially in relation to the US dollar's position as the global reserve currency. According to Jack Mallers, the US has been forced to rely on its own banks to buy its debt since it is having trouble finding purchasers. As a result, the final investor is left holding the bag in a scenario similar to a Ponzi scheme. Global central banks are paying attention, purchasing gold at an increasing rate, and selling treasuries. Jack Mallers also discussed the idea of the trilemma challenge, which emphasizes the difficulties faced by a nation whose currency acts as the global reserve currency. Being the world's reserve currency, according to Jack Mallers, is a trap since it forces the nation to continuously export dollars in order to satisfy demand from around the world. As a result, the domestic economy becomes drained out as the nation prioritizes currency printing over manufacturing goods. Jack Mallers contends that relocating production to the US and devaluing the dollar to increase export competitiveness are the answers. This can be accomplished through tariffs, which Mallers says are intended to reshore production and strengthen America's industrial base rather than to start a trade war. Jack Mallers said the current administration's approach is to use tariffs to encourage U.S. production instead of depending on imports. This strategy seeks to reduce the trade deficit by weakening the currency and increasing the competitiveness of exports. Jack Mallers points out that the Federal Reserve's policies, especially those of Chairman Powell, have clashed with the objectives of the government, creating a complicated and difficult economic environment. What do you think will happen to the global economy if the US dollar loses its status as the world's reserve currency? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.